Welcome to part 2 on my two-part series on the VWAP, volume weighted average price. In the last video, we talked about trend trading. In today's video, we're going to talk about a reversion to the mean style. If you haven't seen part 1, I do encourage you to view it, but go ahead and finish this one first, and then you can go view part 1. Basically, just as a quick review, the volume weighted average price is this black line here. So that's kind of the neutral area, and as long as the market's below it, here we have a trending market. This is what we talked about in the first video. We retrace to it, and down we go, and that's a thing of beauty. Now, does it always do that? No. But that is how we would do it for trend trading. Now, one of the other things I want to show you here real quick, because it does apply very much to today's video, is how we set this indicator up. And again, it's amazing to me, but a lot of people don't use the, let's see, can you see it here? Yeah, there it is. So on mine, I am using the standard deviations, multiplier 1, 2, and 3, and that's very key to what we're going to use in our trading today. Actually, it was for the trend trading as well, as far as keeping you into a trend. So we've got our value weighted average price here, and then we've got our standard deviations above and below, and I like to use 3 lines. So what we were saying is we like to see this stay below the value weighted average price, and then also to kind of stay into this channel and zone down. Okay, so now today we're going to change that up and talk about how we can trade this in actually the opposite way. So in this chart, notice that as we follow this along, the VWAP, I just like to call it VWAP, is pretty flat here, and prices above and below it, and therefore that's a neutral market, just channeling. It's not really establishing a bullish or bearish sentiment at that time. Then we break down. Okay, so we go down here to the standard deviation, we come back up, go down. Now, look at this. We reach the lowest standard deviation line. Remember, I've got 1, 2, 3 below, and 1, 2, 3 above. So for this particular setup, we're talking about the third one, either above or below, in this case below, obviously. And that is considered then a very, very extreme reading. Now, let me tell you up front, for full disclosure, that this does not happen very often. It doesn't reach that third line very often, but that's really the point. In fact, a lot of the best trades that are the highest probabilities don't occur very often, and that's because, well, they're unusual, right? And that's what we're looking for, outliers, something that's extreme, something that's not normal, and looking to trade that back to normalcy, back to a statistical mean. So this is one of those examples. So we wait for this puppy dog to go ahead and crank down to the third one. Again, this is not going to happen every day on every stock, by the way. Not even close. It will not happen most days. So, but we're waiting for when it does happen, and then we're going to trade this back to, guess what? The VWAP, the value weighted average price. And so it's kind of a reversion to the mean type of statistical model, if you will, just the opposite of trend trading. So we're looking for the market to get overextended. Some people would say oversold, and then for it to get back to technically kind of a mean. So remember, the value weighted average price is a little different than a moving average in the sense that it incorporates volume into it as well, and it's cumulative. So basically, that's the trade. Now, of course, you want to find some nice signal there, good candlestick pattern, maybe use my cycle indicator that I can make available to you for free, whatever. Got to time the entry there very well. Let me show you another distinction on how to trade this, because there's a couple of different ways that you can trade this. That is one opportunity right there, obviously. All right, now here's another one. So here we get a similar scenario. Market comes down, hits the third standard deviation line that we have. You're not going to necessarily, actually it's right there on that bar, not necessarily going to buy that bar right there, right? We're going to wait for it to go down. We're going to wait for a nice reversal signal, and it comes back to the VWAP. Now here's another opportunity to me that is normally the best. But if you don't catch that one, here's something else that you can watch for. Watch for to, if it does come back down, not reach the third standard deviation line, but just reaches the second one. Then sometimes, then that can also be a good entry. So again, you want to look for everything. Just as with any indicator, you don't want to trade this indicator alone. No one indicator gives you a probability scenario. You want to be putting several uncorrelated variables together to give you a statistical probability. So this is one more piece of evidence, if you will, that you can add to your charts, and that is another way that you can trade this. If you get, I would be looking here again for a nice candlestick pattern, a momentum shift. If you have a good momentum indicator, that would be really great, because we are getting equal lows down here, and we want to say, okay, we're getting an equal low, but maybe use your favorite indicator down there. If you have a nice momentum indicator you'll like to look for a divergence along with the candlestick pattern, then that could be a nice signal for you as well. Now, one other thing I want to share with you, the details are very important. I like to say the dollars are in the details. So there's always exceptions to the rule, and those exceptions are absolutely critical. So you got to know when these signals are not good as well, and let me show you an example of that. So here's an example where we are not interested in trading it. So a couple of examples actually. So remember, at the open of the day, all three lines above and below the VWAP are going to be, well, at the very open, they're going to be identical. And then they're going to be very close together. And if the market is trending, then you got some volatility, then those standard deviation lines will spread out. So the point is, in the morning, they're all going to be pretty close together. And that is not a time when we're going to take this reversion to the mean trade. So we hit the lowest standard deviation line there, but you know that just really is not significant yet. There's not been enough. Even here where it comes up, it's still too early in the day. The lines are still pretty close together, and therefore it's not really significant enough. Remember, this indicator is cumulative, so it starts basically at 0, and then the lines continue to add to the, well, based on the price and the volume over time. So these signals become more significant when the bands, if you will, expand and get further away from each other. And then finally, one last example. I just feel I would be remiss if I didn't show you an example like this. In my teaching, I always like to show trades that don't work out perfectly. I feel that's very important in just the honesty and the transparency of sharing techniques with you, because a lot of trading courses and so forth, they will just show you a technique and then they'll show you all these examples where it works out beautifully. And the problem with that style of teaching is that it trains your mind to think that it's always going to work out. So you get to see the textbook example, which you need to see. That's good. You need to see that. But I think part of training your mind is also the educator should hold responsibility in showing you some examples of when it doesn't work out, so that you get that into your brain cells as well, and your mind starts to understand that, okay, this is not always going to work out. In other words, have realistic expectations and understand you can still make some money even when it doesn't work out with the so-called textbook scenario. So here we've been in the market for a while. The bands have started to expand away from each other. Great, we touched the lower band. And we do get a move up, right? It goes up to that standard deviation, back down to this one. And look, it does not quite reach the VWAP line. Doesn't quite get there. And, you know, this happens all the time with all sorts of support resistance levels, right? Where it doesn't quite make it there, or it goes a little beyond it. You got to understand these lines on your chart are not going to be super precise all the time. Don't measure it to the pixel on your screen. Markets are just not that neat and tidy. I wish they were, but they are not. So money still could have been made here, but not a heck of a lot. And then, of course, as you can see, the market retains its bearish sentiment and goes down from there. So use your risk management, use money management techniques, use your stops, your trailing stops, your protective stops, because no trade works out all the time perfectly. All right, well, if you like this video, please pay it forward. Share good things with good people. Go ahead and click the share button below. That's really the best way that you can thank me, since I don't charge anything for these videos. In fact, I don't even run ads on them. They've asked me to, but nope, I've got enough subscribers where I could generate some income by running ads, but I choose not to, because I just want to give value to you without any interruptions. Also, if you're watching on YouTube, go ahead and subscribe. That way you'll be notified every time I create a new trading tutorial. Give it a thumbs up icon if you have any comments, questions, or if you have a suggestion for a future video. I would love to hear that from you. And as a special offer to my YouTube viewers, meaning you, I'd love to give you one of my favorite trade strategies called the rubber band trade. It has a very high win-loss ratio. It's a great trade. I still take it every time it sets up personally. And it's very simple. I'll teach it to you in about 26 short minutes. So get my rubber band trade strategy absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And by the way, if somebody has shared this video and you're not watching it on YouTube, that's great. Then there's probably a link below or an opt-in form on the side. And once you do that, I'll personally email the video to you with the rubber band trade strategy.